There's always going to be winners and losers, but I think on the whole the winners there are far more winners. If we look at what's happened over the first half of this year, in Europe I suppose the big thing is probably QE. That's stimulating the fundamentals are being supported by that confidence by occupiers that there's going to be this low interest rate environment, lower interest rates for longer. So it gives them confidence to go out and it's essentially stimulating demand. Irina's point about construction is pretty valid. The fundamentals for real estate, obviously the rental growth prospects driven by that improving demand, but in an environment where there hasn't really been a lot of construction. So increasingly we're finding in at least the prime markets that there is a fundamental lack of supply. That's pushing rents up and we believe will continue to do so. On the investment side as well, QE is, I think unanimously people would agree, it's good for real estate. It's pushed bond yields down from an incredibly low point to an even lower point, and in a relative sense, real estate looks pretty attractive. Irina's first slide was talking about the biggest concerns of investors, and I think number one there was the perception that real estate is increasingly overpriced. Well, that may be the case for some markets, and it might be the case versus sort of real estate's own history, but it needs to be put into context. Overpriced versus what? Overpriced versus bonds? No, it's not. Real estate is cheap versus bonds. European real estate versus other parts of the world versus the US? No, it looks cheap. Versus Hong Kong, other parts of Asia, Europe looks cheap. So fundamentally, and on the investment side, pretty strong prospects going forward. And I think the amount of capital that's coming into the market is set to continue and actually probably will improve even more.